Good evening and welcome to the Australian Stock Market Show. With the All Ordinaries Index locked in a tug of war between buyers and sellers last week, are we set to repeat a pattern set in April of this year of sideways traction? Stay tuned as we'll discuss our thoughts on that shortly. We'll also take a look at the world major markets, and for our main topic in tonight's show we get into USA versus China, who's really driving the Australian share market. First up, we'll share our hot stock tip for the week, so sit back and relax. Again, tonight is jam-packed as we have lots of emails to answer. We'll also take your phone calls and give you the answers to some of the important questions around the market. Tonight we're excited to share our thoughts on some great stocks like S32, Aluka, James Hardie, world stock markets and more, so get comfortable as we'll get into those soon. I'm Dale Gillham and I'm your host for tonight, and joining me are two of our team of highly experienced analysts and professional traders, Janine Cox and Philip Tortevsky. And together, we're Australia's most trusted stock market educators. Good evening team, how are we?
Well, a lot cooler today, thank you for asking.
A lot cooler, well,
it was roasting.
I've always thought you were hot, Janine.
But it was freezing in the bay. I can tell you it freezed the bejeebies off anybody.
What are you talking about?
Well, the water hasn't had a chance to warm up in the bay.
When were you in the bay?
On Saturday night.
You don't even get out of your jeans. How do you get into the bay?
That's a secret.
I don't know.
Revelations.
I'm not going there, Phil. I'm definitely not going there. Anyway, tonight, as mentioned, we get into world stock markets. But first, let's take a look at this week's hot stock tip. Now, Phil, I know you had a brilliant one last week. So what do you got for tonight?
Yeah, I've got a good one tonight as well. The hot stock tip is Orica Limited, stock ticker code ORI. So let's get straight into it. On the screen is the market index. Now, Orica is involved in the manufacture and distribution of commercial blasting systems, including technical services and solutions, mining, tunnelling, support systems to the mining and infrastructure markets, along with some chemical products and services as well. Now, we've got a 2024 year-to-date performance of positive 15%. It's running on a one-year performance of positive 18% in double digits, which is quite nice. It is outperforming the sector by 23% on a one-year basis, but it is underperforming the ASX 200 by 1.35%, which is very interesting, lagging the index only just. Now, there's a market cap of almost $9 billion, and that resembles with the stock being just outside the top 50. So a big player on our market. Now, let's go to the charts on this one to bring up the good stuff, which is, we'll start off on the monthly here first. And what's real interesting about Orica is I've marked two levels on the monthly chart here, Janine, in black. Initially, we've got the $12 level, and secondly, the $17 level. And to me, these represent the two most important levels on this stock since the GFC. You can see, they've hovered around this price in terms of acting as support and resistance, most notably through this period in September 2020, where the stock went sideways for quite a while, with only recently breaking out. And this is one of the reasons why it is a hot stock at the moment, because you can see how strong that support was at $12. It's broken out of this sideways congestion, moving more like a stock in trend. And what's really exciting right now is the fact that it is holding on the flip side of this $17. You can see that it hasn't had the opportunity to do that. It had a go back in 2020, failed, had another go in 2022, failed, a third go in May 2023. Now we're on the flip side, and time is unfolding, staying above that level, which is very promising. And I just want to go to the weekly chart here because there's more exciting stuff on this one.
Wow.
And we've got more. There's what's that commercial? And
I'm loving what you're showing so far.
Steak knives.
Oh, wait,
there's more. That's right. So on the chart, that was a good one actually. It's actually moving to its natural gradient of trend, which is speaks to the fact that it is moving back in the normal ebbs and flows. It's not euphoric at this stage, which is quite promising if you are looking to pick this one up in the short to medium term. And I've marked these two rectangle boxes here in pink where the stock found a really nice price agreement after rising, strength at $15, broke out, which is very common with these kinds of patterns when the stock accumulates. We're unfolding in a second bout of accumulation just under this level of resistance. So I would be watching this level here. I do want the stock to get through here and break out to give that real strength that we're going to bust on out into that next expansionary phase. And it's doing all the right things. I mean, in terms of volume as well, you can see that last week was the biggest volume we've seen all the way back since February 2024. So volume is coming in what appears near the tail end of this sideways accumulation type move. So we get a nice break above $19 here and hold to the flip side. I think we're going to break out into further expansion and start attacking levels around $23.
It's looking really nice, isn't it?
I agree.
really like it. And some great
so
little
do I.
patterns. And I think we've seen a couple of stocks like that recently doing the same sorts of patterns. So watch out for that anyway. That is it for our weekly hot stock tip. Now shortly, we're going to get into our topic for the night, but before we do, right now is your opportunity to get involved in the show and have your questions answered. Now remember, we prioritise phone callers, so call now on 03 929 09988, or you can text your question to the number on your screen. Now the first caller into the show right now gets a free copy of my book, Accelerate Your Wealth. So pick up your phone and dial 03 929 09988. Now while you do that tonight, we'll give you our thoughts on world stock market. So let's get into it.
On your screen right now is a watch list of the world stock markets. Now you can see at the top of the list, there's Argentina, 122%. Don't you wish you were on that one?
Gangbusters, yeah, that's crazy.
Yeah, so I mean, just looking at what's happening in global markets, there's nothing that comes close to that. We've got the S&P 500 up 23.5%. So, I mean, if you see Argentina doing this, maybe there's some other countries that are going to take off and we're going to have some massive double-digit returns going forward. Who knows? Maybe the US market's not the leader anymore.
Interesting.
Okay. Spain's up 17%. We've got the Dow Jones up 15%. That's nice. Lots of big commercial stocks, obviously, pushing the market higher, which is good to see. Asian markets, the Hang Seng's up, almost line ball with the Dow Jones Industrial Average, and that's really interesting to see. We saw some good news from Asia, which is driving the Chinese market higher. We're actually going to have a look at the Brazilian market soon as well. We'll get down to that shortly. But the DAX index, 14.55%. The Nikkei, another Asian market, 14.2% up. The All Ordinaries, I'm just going to jump down there, up 9.26%. That's a nice little figure for the Australian market at this point in time. And I'd expect that we'll do more than that into next year, 2025. Maybe a little bit of volatility into early 2025, but then off it'll go. The New Zealand market, up 8.45%, so we're tracking with the Australian market. The FTSE, which we followed for a while, still lagging. There's going to be some growth in the FTSE at some point as well. It'll play catch up, I'm predicting. And also we've got Brazil at the bottom, minus 4.78. So that's why I wanted to have a look at to see what Brazil's doing, because it's the lagger of the whole market at the world global markets at the moment. So we should see that take off soon. So how about we go and have a look and see what Brazil's doing. These are nice little moves that we're seeing. I'm going to skip straight to the weekly chart here. Looking back, the data that we've got goes back to 2020, but it just trends really nice for a short to medium term trader. This could be some really good opportunities there if you can get on some of these runs here. So just to give you an idea of the sort of gains that it makes as part of these rises, there's 26% in that for each one, but it's just the fact that it just trends so steadily as part of these moves that makes it easier for traders to be able to get that opportunity. So some of the Asian markets are often talked about in that light, but then they can be much more volatile than this one. And we're seeing those consolidations that Phil talked about before on Orica, also on an index. So the same sort of things that you can see happening on an index can also happen on a stock. So there's, whether you want to call that a flag or a rectangle, that's up to you if you go crazy on your patterns on some of these stocks. Sometimes we get people writing in saying, no, that was a flag, no. Okay, well, you just make it whatever you would like to make it. But right here, I'm just drawing horizontal lines there just to show you how the stock price can drop out of those moves and then come back into it and then drop out again. But when they eventually break out again, come back and test. Once we see this support here from the Brazilian market, I think in a move up, a strong move up, back above that high, that would mean it was taking off for me. So I'd keep an eye on that if that's a market that you're interested in.
Well, I think it looks good for the future, but I'm not going to trade the Brazil market. But, I think it's great for those people who like to trade futures contracts on world markets, because that's actually easier trading that than it would be trading FX. Much easier trading an index, because it's less volatile and a lot more easier to pick it up on a futures contract. It's much better. Anyway, that is our thoughts on world stock markets. Now, before we get into our first email, remember to get your questions answered live on air. You will need to text or call into the show. You can also send your questions to info@wealthwithin.com.au, and we'll answer them in next week's show. Now let's get into our first question. Now, Stephen writes in asking our thoughts on the future upside of BGA. The stock is in a medium-term uptrend and currently appears to be in an accumulation phase. This accumulation phase seems to be similar to previous behaviour in the current uptrend. I'm currently working with the weekly chart. So, you want to go to that one, Phil?
Yeah, absolutely. All right, let's go and have a look at a BGA. Now, I want to keep it on the weekly chart because this is what he's referring to through here, that the stock is having a little bit of a pause. Now, what's quite interesting is that in one instance, it could be having a pause for further upside, but given the way it's risen through this period through here, this could just be a huge expansion, euphoric type move, and the stock is actually distributing. So really the determinant for the future direction will be what comes next. While it's stuck in this sideways pattern, we can assume up or down, but I would think that once that confirmation comes, because at the end of the day, that's what it's all about. It's about trading on confirmation, not speculation. And whilst it's moving sideways, given the nature of what's happened to the left-hand side, this sharp move up, I wouldn't be so certain to call it accumulation, but it very well could be. And if it is, if we measure the overriding move, this stock has been up since forming these lows in 2023, about 128 odd %. So, big picture, it is coming into a level through here, where it has found resistance in the past. So it's interesting what's happening right now. If it holds through here and gets another leg up, I would have to argue that this strong buying that came on the 30th of August is well supported, and we're going to continue with that nice uptrend it's been on.
It looks good, doesn't it?
It does
really
look good.
nice.
I mean, there's a nice level across here as well. If we're looking right across the history of the chart, we can see historically it's really struggled with this level. So that's to your point about, it could get caught in the crossroads there and just come back a bit before it's able to get going again.
Yeah.
And I love the story of, not this is Bega Cheese, but I love the story of Bega, this whole
so do
circular
I,
economy.
isn't it amazing?
If you haven't have a check it out. Just Google it and take a look at Bega, the actual town and the circular economy. It's great, and I think it's a future that we need to get into or embrace as Australians anyway. But now we have a caller on the line. Welcome to the Australian Stock Market Show. Who have I got on the line?
Tuck.
Hello, thanks for calling in, Tuck. What's your question for us tonight?
Yes, I'm currently up 10% with ANZ, and I'd like your thoughts on that, thanks.
Okay, what was your thought for that? Short, medium or long term?
I'm a bit worried about everyone saying the banks are overpriced, so I'm prepared to get out wherever I can. So
okay, how long have you owned it for?
Probably 6 months.
Okay, cool. And did you buy it for the long term, or you just wanted it for short term?
I thought out of all the banks, it was one that hadn't run the hardest, so I picked that one.
Okay,
so that was my choosing of ANZ.
Okay, not necessarily the best way to choose a stock, especially a bank stock, but Janine's our resident expert on banks, so I'm going to get her to answer. But thanks for calling in, Tuck. What do you reckon?
I think he's actually spot on. So well done, Tuck. I think, of all the banks, we've seen Commonwealth Bank making new highs continuously. It doesn't mean it's going to finish now. It could continue to go. Westpac and NAB, we've seen making these huge rises. ANZ slowed down because of the takeover that was underway. So if you recall, and then since then it's lagged the other banks. So I agree with you and think that it has got more upside. And let's just have a look at the chart to get a really good indication of that.
Like he's worried about the banks being over, everybody's talking about the banks being overvalued. No, I ignore that because I don't necessarily think they're quite accurate. I mean, you only have to look at analysts' reviews, and most analysts
in our
struggle to beat
market,
the index.
when the material stocks are not performing, where else are they going to get value from?
Oh, financial stocks, that's the biggest sector in our marketplace.
Mm-hmm.
And the landscape for financials has been ripe. I mean, you go and measure a rising rate environment or a high rate environment and how bank stocks have performed in history. They've always performed in that environment. So,
and there's always commentary about talking about, delinquencies or issues with lending in every single cycle, and then the banks still
They do
drive
that all
higher.
the time, but banks still make money out of it, don't they?
They do.
Just last week, or even this week actually, was, ASIC came out saying that they were going to investigate the banks for the loans under, what was it, under the...
I know you'll think of it in a minute.
It's left
anyway.
me now, but sorry.
Spit it
Actually,
out.
it's gone.
Well,
It's
yeah,
gone.
I mean, how many times have ASIC come out, we're going to investigate this for banks,
Yeah.
or whatever it is, and it's a little bit of a slap on the wrist, and they keep going doing what they're doing. But so where do you think ANZ's going? Do you think Tuck should sell it or keep holding it?
Well, I think that he's got to make that call based on rules, but at the
We know
moment
that,
there's
but
no
where do you
ru-
think it's going?
Well, I think that's going towards the all-time high, just looking at it. If we have a look at the resistance that it's gone through, most of that resistance happened here. So the highs way back in 2021 that were formed, and it fell away into this low, came back up, challenged it again, pulled back, broke through the high again. It's only just gone through it. So, there's still the potential, I think, for it to come up at least a bit closer, possibly another 10%, maybe 15% towards that all-time high to break it. If you think about it, we've seen Commonwealth Bank continue to break new all-time highs. We've seen Macquarie Bank take off. The other banks have still got upside. So,
Still got upside.
And look, we're heading into the Christmas period. Sometimes we get some volatility around this time of year, but I was expecting it to happen before. I wasn't expecting the stocks to be this strong at this point in November. I thought by now, before this, they would have pulled back, but they haven't.
Phil and I were on the bullish side, weren't we, Phil? Anyway. But Tuck, you're going to get a copy of my book, and what I suggest you do is when you get it, read it. It'll help you manage your ANZ trade. It'll help you with your exit strategy and get out at the right time. But right now, it is bullish, as Janine said, and we think it's got more upside. So stay with it while it's moving up. But the book will help you with an exit strategy on that, because we actually do study ANZ in the book. Now we've got an email from Harry who says, I'm a long-time viewer of both your YouTube and Talking Wealth channels. I really love your insights during the market report show. However, I have always been a little nervous to write in, as I'm one of those uneducated viewers. I wanted to get your view on South 32. I have been watching it for a while, but I don't currently own any of the stock. After it gapped down in July, it seemed to bounce back strongly. And you've previously mentioned if the stock could break above $4, it could indicate a buy signal. I'm going to go to you because we've talked about this, Phil, a few times, haven't we?
Yes,
32.
we have. And
he watches our show.
Yes, it's really nice that he does watch our show. The market report, that is on Talking Wealth, for everyone who isn't aware of that one. And, we run through the market. We constantly update every week how the market is heading. And as you mentioned, rightfully so, we seem to get it right every now and then. But
I get so many
think we
people
get it right
telling
more
me
than we
how much that they love that report. So you guys are doing something right at least, aren't you?
It's all Phil. It's all Phil.
no, team
and
effort.
just the tips that you're giving during that market report and on different stocks, some of the students are blown away by that.
Well, we can go into more detail. That's the thing.
Yeah, we've got time. We've got more detail, and we look at stocks to bring up. We bring up ROG graphs and look for stocks to put on watch list and help people and answer questions. We've got a lot more time than we do on this show. So we get right into that every
Fantastic.
single Monday.
All right, so how about we get to S32 right now and have a good look for you. Now, I totally like the idea about, above $4, because above $4 gives you real strong confirmation in knowing that, hey, this uptrend is likely to resume. And, there's been some really strong signs with S32. Obviously, the stock had pulled back around 50% from the all-time high, which is a very healthy pullback when you're talking about these miners. And it's found support, initially bounced the first time in February 2024. But the most exciting part to me about this stock was the fact that it came with negative news.
Yes.
So negative news came out around the 19th of July. And what you can often find, negative news can break a stock, really send the share price plummeting. But on initially, that's what was happening. The price gapped down, fell away, but it showed the strength of the February low. It showed that real strong buys were there.
I think it was the big end of town because the negative news wasn't that negative.
Yeah.
It was a little bit less earnings on one area of their business, but nothing devastating. So, but the market punished it big time.
And what's so nice about it, because now we get to know, on the flip side, through confirmation, is that, hey, that was just an overreaction. In fact, another really good buying opportunity, which saw the market really springboard all the way through there. And unlike stocks like Paladin and Mineral Resources and, Fortescue Rio to some degree, if you measure that period through where that euphoria came during the China stimulus talk, You look at S32, and that's pulled back the least out of all its competitors in terms of share price. So to me, it looks the most bullish. I really like the fact that it's, it seems to be agreeing here through price, a bit of accumulation, but I do want to see it get its head above $4 because, there is, I guess, one concern that it could get stuck in this range through here between 4 and 280, given the nature of the way price is moving, because it is moving a little more volatile than normal right now. When price gets a little more volatile than normal, it does have the tendency, to flick on up and down and get stuck before breaking out into a nice clean trend.
So Harry had nothing to worry about, even though, as you said, you're uneducated. Great question. So please keep it up. Keep asking the questions. The more you ask, the more you're going to learn. So anyway, next up is James, who is keen to get our thoughts on WiseTech. He says, I plan to enter on Monday if it does, or if it closes the current week above the prior weekly peak at $139.02. Trade short to medium term, stop loss set at 15%. Also, what books are on your Christmas trading wish list? Are we allowed to have two questions, a stock and a question?
What's a
Can
Christmas
I answer
one?
the Christmas wish list then?
You can answer that before we get into the
Because
stock.
I would say none. And the reason for that is if you're looking for something to read, there is so much for you to go over in the course. You need to do a little bit more homework and revise your notes. Go and watch some of the webinars. Make sure you've got trading essentials so that you can get the weekly reports
We know
each week.
James
and
is a graduate of our course. That's what you're saying. Go over the course again.
Go over the course material and also use the weekly report that supports you and use all the materials that you get in that service as well.
I mean, we suggest this on a yearly basis that the graduates go over the course again once a year because you're actually doing it with a different hat on. The first time you go through the course, it's with the education hat on. It's like, I'm a student, I'm trying to learn. And then we start trading and then they sort of forget in the course. And I know all three of us have supported these traders, over the decades that we've been doing this. And it's interesting how much they forget
You
that's
just
in the
pick up
course.
extra bits, don't you?
And it's like, and you go to people, well, that's in module 2 or that's in module 1. And they go, what do you mean? I go and read it again. And then they read it again and they go, oh my God, how much did I miss or how much I had forgotten? So,
Or, I've just seen this unfold on a stock. I can use that.
Yeah.
It's going to help me.
And it's often the part that you think's the most simple, right? You skim over it initially and you think, oh, this is easy, it's simple, it's not important. But then wind forward 5-10 years and you go, oh, actually, this is probably the most important bit. So
short-term bar analysis comes to mind
Is that
straight
how long
away.
it took you to...
So let's go and have a
Your
look.
notes.
Well, let's go and have a look at the stock anyway. Now you've answered that question. So what's the stock?
All right. So the stock is WiseTech. Now, buying at all-time highs, the stock is coming off a really sharp rise, and that was post-earnings in August 16th, or 23rd of August. Now, personally, when stocks are moving like this, I would have rather getting involved, and if I just mark up one of my...
Now he's going to enter on Monday.
Yes,
which
if it
means
closes.
it's probably yesterday because he would have sent this last week, yeah?
No, so he's saying if it closes above this level this week, next Monday he's getting in.
So when did he send the email?
I think yesterday or
If he sent it yesterday was Monday.
Yeah.
So I'm just saying, did he buy it yesterday or is he going to buy it next Monday?
next Monday.
Let's just say that he knows exactly what he's doing and he thinks, all right, I can see that there's a peak there. If I wait for it to prove it's actually broken that level and it closes above that point,
Good
that
strategy.
increases his probability, doesn't it? So
Yeah, in terms of giving that
Reducing
confirmation for
risk.
further process. But I would ask two questions. I would ask, what's your trade time frame? Is it short, medium, or long term? Because that'll dictate whether it is a likely a better trade or not. And just looking at the chart there, if we go the way the recent rises happened since January 2024, it's really shot off away from the gradient of trend, which you can see in this line through here. And to me, when stocks are showing this euphoric buying, I don't want to keep bringing up Drone Shield, but there's plenty of examples on the market. When they start showing this euphoric move, sure, the stock may continue on given the tech sector is humming along right now. There is support behind it. But in terms of a risk-reward scenario, I think there's a high enough risk that this one could just turn around and go all the way back down to that natural gradient. I would be wanting to trade on the safer angle of rise. It's a bit too steep for me right now.
There you go, James. You don't have two fans on this stock, even though it's going vertical at the moment. So maybe do what Janine said and talk to the team at Trading Essentials and they can help you. Anyway, that is our take on WiseTech. Now, I'm sure you've often heard the saying, when the US sneezes, Australia catches a cold. Now, basically meaning that our share market follows the United States. But is this really the case? Now, the influence of China is growing, and so tonight we discuss whether you should be focusing more on China for guidance on the future rather than the United States. Having the right focus could have profound implications for your investments, especially if you're heavily invested in mining stocks that depend on Chinese demand. We'll delve into these critical questions shortly, but first let's examine the current state of the Australian market and its global drivers. Now I'm going to talk to you, Janine, because you love this stuff.
Well, the Australian market, as we know, has been bullish, just like the US, but not to the same degree as the US market.
We have
The US
different
market
drivers.
driven by tech, heavy tech. The Australian market has tech influence as well, but just that the US is taking over our tech.
Well, our tech's only like 4 or 5% of our market, so...
But tech is everywhere now. It's not
Well,
just
it is.
directly in the tech sector. So the other side to that is that the Australian market has traditionally mirrored the US market's moves, although a lot of people wouldn't realise that. But every 5 years or so they switch, and your book has a beautiful chart which I often refer to in that this is your second book.
Accelerate the Wealth.
Accelerate Your Wealth, yep, and that explains a lot of things. So if that's a really good indicator of what's gone on since the 60s?
Oh, yeah,
Something like that,
much earlier than
1930s. It's gone on for that long. Then in theory, it should continue, and we should see Australia overtake that. But for that to happen, we need to see the materials sector catch up, don't we?
That's on page 60 of Accelerate Your Wealth, the chart that Janine's talking about. Now, absolutely, I believe what you're talking about. And it's worth noting that the Australian market has historically followed the US closely. However, with China being our largest trading partner, especially in resources, are we now seeing a potential shift towards stronger alignment with the Chinese market trends? Now, you and I have chatted about this a lot, Phil, over the last few months.
Yes.
So I'm going to go to you on that.
Yeah, and I mean, if we're talking stock market, I would say it's an answer of yes and no. Specifically to the resource sector, yes, China does influence that sector quite heavily, given they are the biggest, customer in the coal space. But the US is still the biggest investor in Australia. China doesn't even fit in the top 5. It's the US, Britain, and I think Japan's in there too. Yep. And so I, still think from a from a big picture perspective, it's the US who we are more in line with. But if you want to talk specifically resources, then...
Yeah, but what's driving our market? And that's the question, isn't it? Not necessarily, because obviously the US investing money into our stock market, but China's buying our resources. So anyway, well, how about we take a look at some charts to see who Australia is more in line with? And I'm going to go back to you, Phil. Bring up the charts.
Yes, all right. So let's get to it. Now, we've got brought up on the screen right now a line chart representing, obviously in black, the All Ords Index, in blue, the S&P 500. And just to show you what this example is displaying is the relationship in the movement. Now, we're going all the way back to 1999, and you can clearly see that, bar from a few periods where there was, the market moving, for example, through here, you saw the Aussie market dip much heavier than the US. But really, if you look at that, the US and the Aussie market are moving in unison and still are relatively to some point today. We had a pullback from June 2021, so did the US. We basically found the low in August 22, so did the US, and we're both rising right now in an uptrend, trading at all-time highs. Now, if we overlay the Shanghai Composite Index, which is in the red,
it's very different.
You can see a very, very different picture, and I'll just bring it back from 2008, let's just say the GFC. Whilst our markets, the US and Australia, went on with things, look at China. China's been stuck sideways all the way back from 2015 and, resembling more of that downwoody, sideways type market. So
you think if the rhetoric about the Chinese having such a dramatic effect on our market were true, then you'd see it in a comparison with the Asian markets, wouldn't you?
You would, and these examples really prove the point in terms of why it's so important to go and do the research, because what you hear sometimes is, well, generally a lot of the time is not.
The chart also shows you when you look at when China was in its growth phases, our market was way outstripping, even though it was the same direction of the US. Our growth was way outstripping the US. When China was pulling back, that's when the things changed a little bit. So it does tell us what's going on. And if China's going to go into a boom, I'd be betting on the Australian market going up strongly as well. So are we experiencing a decoupling from the US market? Now, this is a great question, Janine.
Well, look, there has been a bit of a decoupling in terms of, the acceleration of the US market and our market, and the fact that the materials sector has slowed down. But the Australian market, obviously we were saying before, is still mirroring the US market. It's the Chinese demand that's really important here and how it affects our materials sector. That's the really important part in terms of the link between China and Australia. And going forward, if Chinese demand picks up, that will be reflected in the materials stocks. If it goes the other way, we see that the opposite happen. So that's what we're really seeing over, currently.
So basically what you guys are saying is the direction's going to be pretty similar to the US, but the speed's going to be different.
Yeah, well, it's not the first time we've had a two-speed economy where banks have taken off and the mining sector has been slow. But that changes eventually.
It does. Well, anyway, that's a great observation, Janine. And recently, Australian mining stocks went on a tear with China announcing a bout of stimulus. So how about we take a look at the relationship with the mining sector and the Chinese market? You want to bring that up?
Yeah, absolutely. Now, this is real interesting. If we have a look, we've obviously got the materials sector index, which is the XMJ, the Australian one, and we're comparing that to the Shanghai Composite Index, SCCC. Now, again, going from 2006-2007 period, you can see there was some correlation through here, not correlated around the 2015 period where you saw the Shanghai index rise quite sharply whilst the materials sector was falling away. And right now, as we move through into the 2020s, again, you're seeing that correlation. No, Chinese market not rising, stagnating sideways, and have a look at the materials sector, mimicking that exact move. So I would say that there is a direct correlation between the materials sector and the performance of China.
It's really nice to see it in that light, so that it really rings home what's happening, and it makes it really easy to see when the change happens.
Yeah, and it just makes so much sense, as you said. Obviously, if they're going to be spending and buying, it's going to show up in the material stocks.
So we've got to come back to this chart again in future, don't we?
We do. Keep it in mind anyway. One another key point to consider is the volatility of the Chinese market, because if our market begins to align with China more moving forward, then it's safe to say that our market may become much more volatile. Also, take a look at this graph which shows the Shanghai Composite Index volatility relative to the S&P 500 in the US. Now, why is this, Janine? And is it a really good thing for us?
Volatility is good, so that big fund managers tell us, because obviously there can be money made from that. But at the same, because you've got to have volatility to be able to make a profit,
Well,
don't
you
you?
have to have volatility, because volatility means direction.
Yeah, but I mean, with the Shanghai Composite, if we see volatility in that market, one would expect that to be more volatile than our market anyway.
All Asian markets are more volatile than ours.
That's been the case. But if we're looking at what's gone on in Asia, in China particularly, we've seen the collapse of Evergrande. We've seen a whole lot of issues there. Government policy changing can have a big impact. So we're likely to see knee-jerk reactions to these sort of things that are going on in China, and will continue to go on, I think, over the next 6 to 12 months. But eventually, China's got to pop, and the materials sector's got to do the same.
China's got a pop. We've got K-pop, so we're going to have C-pop now, are we? Anyway, well, that's great. So let's now get into the stocks, some of which are more closely aligned with the US market, whilst others are more influenced by the Chinese market. So you want to bring up the first one, Phil?
Yes, all right. So starting off, we've got South 32, again, a stock that was covered in one of the questions, but this one is very aligned with the Chinese market. Key, as we've got here, mines, key materials like aluminium and manganese. Manganese? Is that a...
Manganese. So basically what we're seeing here, really, when we think of it in light of what the Asian market, the Chinese market has done and what the materials sector has done, we're more or less seeing that it's just coming back to its sideways move and it's stagnant, right? So until we actually see that break out of the Chinese market, materials start to take off, S32 will probably be in there and off it will go. But it's just a matter of time and being patient, really, isn't it?
Yep. Well, I mean, even just look through this period here. This was the moment when the stimulus was announced in China, and look how strong reaction was from buying. So it's very clear buyers are waiting to see potentially there is going to be another bout of stimulus in China again. So really that uncertainty, and the chart really does, as you said, Janine, look a bit uncertain, but big picture, given it's found that support, as we just mentioned, if we do get another nice catalyst coming out of China, I think this one's going to take off quite strong.
I do like the potential of S32. It's just been a bit slow at the moment, isn't it, really?
Exactly. All right, the next one we've got is Iluka. Now, Iluka's been in a downtrend. I want to just go to the monthly chart for a minute there. Supplies mineral sands used in industries influenced by Chinese consumption trends. So we can see there, this is a totally different scenario. So we're talking about a major decline in Iluka. If we look at the percentage drop in the share price from that high, we're seeing its fall is 56.7%. It's actually slowed down in recent months, even though it did this reversal here. So it's just trying to find its base at the moment. But the risk is when it's doing this sort of thing that we could see further falls. We can look at the trend, the angle of that trend coming down, and there's something really nice there about that. We could see a bit of a break at some point, but at the moment I would just sit tight and wait for this to happen and wait for the upside effect to occur to see if that pushes a Luca higher. It's all about the technicals at the moment and just getting that confirmation, as Phil said.
Well, you said it perfectly, getting confirmation, right? And what's really interesting about this particular chart, if we just zoom out big picture, from 2013 onwards, it's really coming into right now, if I can get one of these rectangle boxes up here, it's coming into a period where price, really found its feet or agreed for a very long time and acted as the springboard for those big runs up. So we're coming into that period where you might see the stock, really stop falling, start getting accumulated by buying again. And then, rather than, and that's the point, rather than just waiting and picking it up around these levels to say, hey, you know what, there was buying here in the past, it looks like a good level. Because what could happen, it could come into here and then get stuck sideways.
Yeah.
And you've got to think about the opportunity cost of your money in sitting in a stock that is moving sideways. So as Janine said, it's getting to a level that is very close to, in history, being a good buying point. But you do want to see that confirmation, and that trend line you've marked there is perfect.
Yeah, oh, thank you. That's very nice of you to say so.
Well,
That's my first compliment.
You guys are playing nice tonight instead of badgering each other.
No boxing gloves tonight.
No boxing. Okay,
All right, Linus Rare Earths. Now let's just have a look at this one. This has come off the low. Oh, you've got to be liking this particular stock, don't you? The trend line we can put down there somewhere. There's a momentum line, if I can use that. And we've seen the breakout from that. A bit of a pullback to test the resolve of the buyers at the moment. So, if you're not in it yet, you haven't missed the boat. That's really the point, and I'd be waiting for it just to turn around and go back up again. But rare earth elements are critical in Chinese manufacturing, including electronics and defence. So, there's a risk here that it could follow the angle of this line back down. So that's something that we're just waiting to see whether that's the case or not. But I don't think it'll be too far away. We can see there, if we look over the history, we've got a bit of a resistance level across there, and that may be all it is at the moment. So just watch this space with Linus Rare Earths.
Okay. What do you reckon?
Can I add on to that one? Yeah, sure.
You can add on to that one.
Yeah. Well, what's super interesting, rare earths, obviously, lithium and cobalt are the big things spoken about in terms of the EV batteries for the cars, whereas rare earth elements also play an important part. I just did a podcast on this about how it's, a level that is overlooked in the market.
Is it up yet?
To some degree. Well, I just did it today, so it's probably going to be up next week or so. So wait for that one. I'm just looking through pockets, hidden gems in the market, and Linus is one in terms of that rare earth space. But what's real interesting is when you see stocks, form all-time highs and then capitulate all the way down, there is that very real reality that, hey, this stock may never see growth again. It can happen with stocks. They fall all the way down and then they just meander around the all-time lows, start to become really illiquid until they either get taken over, delisted, whatever, what have you. But this one's found another leg up. It's really come out of that 2015 low and turned from a bearish market, experienced that accumulation phase, broken out into expansion, and this pullback here just explains everything. It's managed to hold, literally all that buying through there. So from a technical perspective, it looks very interesting.
All right, you can throw us into the next chart then, eh?
All right, so next up we have Ansell. Now we all know what Ansell does, a medical and industrial glove producer with a significant portion of demand coming from Chinese markets. And boy, the chart looks very, very nice at the moment. This one here, such an important level on Ansell, if I can get my horizontal line through here.
Now, this is quite a volatile stock. It can actually jump. You can be trading this stock and it looks beautiful, and then all of a sudden, big reversal, and it's just wiped out some of the returns. So you have to be crafty in terms of how you're setting your rules on this one, not just sort of thinking I'm just going to let it go and buy and hold. This is definitely not a stock for that.
Oh yeah, absolutely. And the 2130 level that I've marked there, that is a big level that has been so important for this stock dating back to 2016. You can clearly see it's been the springboard for every move up since then. And what I really like about this current move is that it's surpassed the previous move of December 2022, although it does look a little stretched at the moment.
8 months straight up. Wow.
Yeah, it's quite a lot.
You can't see 8 months straight up on that whole chart for the current move.
Absolutely. And, it looks like it's still going in November. I mean, the month's about to take out, or it has taken out the previous October high. And so right now, Janine's right, it's about strategy, getting in at the right time, not trying to buy at the end of those euphoric type moves, because you could be met with some strong volatility on the downside.
You can have the next one.
All right. Yep, we've got the first one here for the US market. Now, this one is building products company with a strong presence in the US housing market. So we've seen a lot of volatility going on there. We've seen higher interest rates because they're trying to stem inflation. Obviously, that's not any new news to you. But we're looking at James Hardie and what it's doing. Now, I was thinking some couple of months ago, Dale, that it just looked terrible. It really did. This sell-off that we saw, and I'm just going to expand the chart so you can see that it can be quite volatile on the upside and the reverse. But here we saw in May it got sold off quite heavily, but then there was no conviction in that selling. It just stayed there and it then rebounded, but it wasn't going anywhere, and it's still not. We're seeing, the market's trying to push it higher, but then it just sits there. But I think this one could be a rip-roaring stock if it gets going properly. It's definitely one to watch.
Got some great got some great products in that building space, and so if the US housing market takes off with Trump, then this one's likely to go with it, isn't it?
Look, any companies with a manufacturing base in the US and in countries that are going to be friendly with the US, at the moment, Trump was making out like it was going to be across the board, treat everybody the same, but we know that never happens in these deals that get...
No, they don't, but there's good. I mean, Phil and I talked about one only in our microcap recordings we did for YouTube and looking at all the microcap stocks that we saw at the microcap conference. So one was Bubs, and that's looking to set to take off. But so if you haven't seen those, there's 2 recordings on microcaps that Phil and I did. So second one went up last Friday, I think. So go and check that one out. But next stock, Phil.
All right. Next up, we have Aristocrat Leisure. So a gaming company with large share of its revenue coming from the US casino market. And I mean, this stock hasn't been hidden from the market, and buyers have picked this one up really strongly from that $40 level back in May 2024. To me, it looks very stretched right now. I wouldn't be looking to pick this one up. But
one of our advanced students has got this, and the real challenge at the moment is how to manage it, right? Because it's accelerated so strongly. It's a quality problem to have.
Yeah, it's a tough problem to have, isn't it? Making more money.
Yeah, it's a good one.
I hate making lots of money.
Yeah. Yeah, no, it's look good on him. Well, or her, whoever. Well, there you go, good. Good pickup, and yeah, it's all about right now. The conversation should be about how to manage an exit. If you're not already in it, I wouldn't be looking to get into it right now. I'd wait for it to settle back down, and if you can get a pullback to around that $50 mark, that would be ideal, but potentially not through this level. So you really need to eke out what kind of strategy you're going to play. Any pullbacks above 50, I would be looking real short-term type opportunities. But if we can get a nice healthy pullback to around $50, then potentially more medium-term opportunity on the horizon.
Now, when you're looking at gambling stocks, is our economy really struggling?
Well, is it a gambling stock? It just makes machines.
But we still put it in that category.
It doesn't collect money from the gambling. It actually supplies the machine so the casinos can let you gamble.
But they must be doing well if they're selling more of it, because when they're not, we don't want any more programs, do we?
Well, yeah, I understand that, but the semantics at the moment, isn't it?
Pokies are not your thing.
Pokies are definitely not my thing at all.
Okay.
I put $20 in a machine in Vegas when I was there. That's my extent of spending money in Vegas. I'm on gambling, but anyway, we've got another stock.
We should move on. We've got Xero. Did you want to chat on this one?
This is phenomenal now, isn't it? Look, just it's taken out that high, which is what we expected to occur. And look at the size of this monthly bar. Now, I just want to go back to see where we've had this previous sort of appreciation in price. If we look before this prior high, the range of that bar was 25%. The current range of this bar is now 20%. So we're in that sort of zone. We could see another month up. After you get these sort of moves, you could generally see, it's when people have missed out and they're thinking, I can get in now, and then it moves up again. So we could see this stock head towards the $200 mark quite easily.
Yeah, I mean, there was a catalyst for this one, for that move, that it came out with better than expected earnings, I think. So
yeah, it's just clearly broken that line, hasn't it?
Well, it has. So it's looking quite bullish at the moment. But would you get into it right
No.
now? That's the
Look,
question.
if it did a retest of that high and then took off again, yep, you could quite easily get into that again. But it needs to do a retest of that high if you're not already
I
in
think
it.
you got one more stock, haven't you?
Oh, we've just in time for one more, and this is Amcor, which is a really interesting stock. We've talked about it on the show before. Global packaging company with a significant footprint in the US market. Now, that's a good thing to have in this climate, depending on the competitors that it's working against, though. But we can see here it's pulled back from that long-term level of resistance there, but it makes it easier to get into a stock when it breaks these sort of levels. So just let the market test it. Don't be a sucker and try to get in early. Just wait for the confirmation. Let's have a look at the upside we've got from that high to the all-time high. So there's still 12% in it. And if it takes off, it's more than likely going to go through it. What did it do in the past when it broke through highs? Well, 12% there. It went up here, 20, 30% there. So how could it, what's the worst case scenario? Okay, it might only go up 6%. Let's see where we go from there. If it does break through, we're talking about, and my finger's not just doing what it's supposed to do, 6% there, we can see $20 roughly, is it? So, it could still break through to that as a minimum if it gets through the all-time high.
It stuck, it wanted to, it tried to go lower, it didn't want to go lower, it stayed at 15, tried to go higher, and it's gone back down into that, sweet zone around 15. So right now, unless there's some kind of catalyst to really push this on higher, price looks
Well, they're
stuck.
trying to stimulate the manufacturing sector. They want manufacturing to go ahead in the US, more jobs, supporting the economy.
That could be it.
These sort of companies do that, don't they?
Well, yeah, they're trying to do that, but we've got to have the right environment from it, and do we have the right governments to be able to do that? But that is the big question. But anyway, thanks, team. Now's the time to smash that like button and hit subscribe. So stay with us, and we'll be right back after this short break. This week on Talking Wealth, discover how diversification can manage risk in life and investing with Brighton Barazia.
I think there's a tendency for all of us to want to just go all in because we want to make that one bet, but it's actually spreading your risk is actually the smartest thing to do, and also the most effective way to generate returns.
See how mindful words shape confidence at home and work with Sylvia Arreton.
Specifically when we talk to children, we're in this everyday, stress of life, and we're just throwing out words to them. All of these things come out of our mouth, and what we don't realise is the impact that actually has on the child.
From an award-winning agency to a mission-driven startup, Adam Mumford shares how true wealth includes giving back.
The world is going to be a better place if you are financially okay. Find a purpose in something that really drives you to give back, because you know what? You feel good when you do it too.
Get your free 7-day trial now to watch this and more.
Only on Talking Wealth.
All that and more, only on Talking Wealth. Moving on, if you want to talk about a stock or ask a question, pick up your phone right now and give us a call on 039290 9988. That's 039290 9988, or you can text the number on your screen. Now, whilst we wait for your call, let's get into our next email. Now, Nick writes, last week you mentioned Seven Network and noted its rise as a media company. However, since Seven Group Holding also owns numerous mining and industrial companies, it would be interesting to understand which sector is primarily driving the stock higher, as we expect mining to rise over the coming year. They recently acquired Boral, making me a shareholder by default. I'd love to hear your thoughts on where this stock might be headed. Beheaded. That sounds like a bad thing. It's beheaded. No, where's it growing, Janine?
Where is it growing? Look, what have we got on the screen there? Have we got it there? It's SGH
Yes,
is
that's
the
new
code,
code,
isn't it?
yes.
That's what we got stuck on before, isn't
Yes.
it? So SGH has just been flying. It's actually taken off through that prior consolidation and looks amazing. The last 3 weeks have been up. It could, given the strength of this month, continue to make that move up into the following month. But We are seeing, quite an exhaustion potentially coming in now. And when stocks go vertical, you often get that scenario happening. The angle of the run is giving us an indication of that unfolding. We're just seeing, a break away from the angle of that rise. The last time that happened, it lasted for 3 or 4 months and then fell away. And we've probably got maybe a couple of months to go, and then it might turn back.
That's got to be searching for a high, doesn't it?
It's got to be.
It's got to be. So what's driving the growth? That's the question. So...
Well, I mean...
The takeover, isn't it, of Boral is part of it. I mean, Boral was doing quite well, so it's a takeover of that. The market's telling them we think you're doing the right thing. It's giving them the big ticks across the board. The industries that they've invested in are helping support the bottom line.
And if you really want to look at, as you mentioned, at that bottom line, go and look through the financials, see where the revenue's coming from or where the profits are coming from.
Yeah, go look at the half-yearly, yearly reports.
Yeah,
I mean,
exactly.
when's the next one due out? We've had the full yearly report, which was a couple of months ago, yeah?
Yeah.
So when's the next one will be out, what, March?
So it's generally August, March, most companies. Some get the weird ones that come out in December and, off times that you get caught out. But, yeah, generally August, March.
Generally August. But, I mean, obviously, to look at what's actually driving it, we need to get into those financials and determine, well, which area. But you're saying...
But do we care?
But do we care? No, just trade it.
It's going up.
But would you be buying into it right now?
No.
No, just so stay with it anyway. Now we've got a caller on the line. Welcome to the Australian Stock Market Show. Who have I got on the line?
Matt.
Well, thanks for calling in, Matt. What's your questions for us tonight?
Tabcorp Holdings, TAH.
Okay. Yep.
Yeah, I actually bought into the stock a couple of days ago at 52 cents.
Yep.
It hasn't broken a trend line yet, but there is a swing entry there. It's kind of created a double bottom. It's a little bit off being confirmed as a double bottom, but I think it looks pretty good. I'm a little bit worried about little drop in volume, but there was a big increase in volume off the last low.
Mm-hmm.
But I've got a stop loss on it at the last lower trough there at 44 cents. But it looks pretty good. It should maybe jump a trend line this week, I reckon, hopefully by the end of it, and then I reckon it'll be off and going. I just wanted to know your thoughts on it.
Okay, short, medium, long term?
Medium term.
Medium term. All right. Well, sounds like you've done a lot of work on the stock, but I'm going to throw it to Phil now. Thanks for calling in, Matt.
Yeah,
reckon,
love
Phil?
it. I mean, look, as you said, done all the work, looking at all the right things. It is a higher risk type entry around these levels, but, if you're accepting the risk versus the reward, the higher the risk is always the higher the reward. So, I've got no issues with these kinds of trades, Matt. I also like looking at this kind of stuff. But anyway, let's have a quick look at the charts there for you. And obviously, one could argue it is a little early if we're talking about the monthly chart and saying, hey, well, we don't really have a test of this low on the monthly. We do have one on the weekly to that degree. So, I mean, Matt's right in saying it is coming into that trend line there. So if it does break through, that'll give you that first inkling or indication that it wants to break higher for the medium term, as you've rightfully mentioned. All I would say is, as long as you've got your stops in place, which you do, you're monitoring it on the way up. Momentum is up on now. We've broken through that previous peak, as you mentioned. If we are coming into a real significant low, and I'll zoom out on the monthly chart here for you if I can get through there. Obviously, without a doubt, 40 cents has been so important for this stock. You can clearly see through here how much it has been acted as a springboard. And in terms of this particular move, what's real interesting, we say this time and time again, Dale, stocks when they do go vertical and they give those euphoric type moves, because you can clearly see the nature of the price action now, today, or even from 2020 is much different to what it's been doing in the past. It's much more volatile right now, and it's moving more vertical up and also more vertical down. So I would argue picking it up at these levels, if it's going to repeat this vertical type new characteristic of it, you're going to see quick gains. And you should expect quick price action from these levels. If it changes and stops giving you that quick price movement from here, then you've got to question, well, what's changing now again?
Exactly, you've got to be on the ball, don't
Why
you?
is it slowing down now when it's giving me this such volatile move, meaning that there's money flowing in and out? So I would anticipate and look to see price really resemble what it's been doing. As long as it's fast and strong like before, then that should bode well for you.
Yeah, I mean, Matt sounds very much like a student or graduate of our course.
He is a student, and so we should give him a spot on the show, yes.
If you want to give him a spot on his show, can he take your seat?
He can.
Maybe we can invite him in. Come on in and take Janine's seat.
Come and sit here.
you want to sit with him as well.
Well, look, he's welcome to
Well, we've
any
got
of
a
the
fourth
chairs
chair.
here.
Come on the show, Matt and Janine. You can sit next to Janine and she'll hold your hand. But well done. That's 2 thumbs up from the team there. Anyway, remember to show your support for our channel and smash that like button. Next is Joanne, who writes, I would love your thoughts on Fisher & Paykel Healthcare. I'm not in the stock presently, but my backtesting rules for entry have already triggered. The reason I haven't entered is because I've been considering the risk, as the stock has already had a very good run during 2024. Price is also sitting just below the all-time high, so it could face some quite immediate resistance. Now, in this instance, would you wait for the price to go through the all-time high, or stick with my weekly rules and be prepared for potential all-time high resistance? Janine?
Yeah, I'd have to say I agree with your thinking, definitely there. And it's good that you're actually looking at this and not just blindly buying. You've got rules there, but then you're considering the environment and assessing those risks. Now, it could just as easily pull back from here. It could take out that low. If we look at the all-time high, first of all, I'll just enlarge this chart where you're talking about. It's saying, okay, it stopped there numerous times in the past. It stopped again at the same level, but it did go through recently, which is one positive, the fact that it's broken through already. It's just got to spend enough time consolidating and enough buyers to outweigh the sellers, the short-term profit takers, to push it back through. But, you know, if I'd prefer to see it consolidate a bit more, frankly, given that it's stopped there.
So do you, like she said, her backtester rules have triggered already, but she didn't buy because it's been so strong in 2024. Would you have stuck with your backtested rules and just bought? Or do you think she's on the right thing with waiting because it's had such a good run?
That depends, and I think if that was actually the back-tested entry, that she's saying it was, but you know, obviously not being able to check the history of that to see whether did the exit occur, and is this a new entry then coming in, or is it just another entry?
The back-tested rules for entry is triggered, so would you just enter on your back-tested rules?
Not just looking at that chart with it right at that major resistance level. So I think she's doing everything right.
So you're saying there's something, because obviously your back-tested rules are one thing, but then so therefore that would imply there's missing some sort of analysis to keep her out of the trade.
Yeah, look, and she may be seeing something that say...
It could be gut feel.
Even an advanced student will see what's going on here probably quicker than someone who's, say, done the diploma course is going to see it. And I mean, just if I can use that as a bit of a segue at the moment, we have had a special on the advanced course, which I'm super excited about. The people who have signed up to get the mentoring as part of that advanced course and working with you. And also we've got a Christmas special, haven't we, for the diploma?
Other course, yeah.
For the short course
Big
in share
Christmas
trading.
special, huge Christmas special. So if you haven't...
Sorry, which one is it? For the
normal share
trading and investment course, that's right.
So if you haven't got the senior
right
Christmas
eventually.
special, talk to our team, ring them on 92909999. Now, if you enjoy watching and want to see loads more of our content, click subscribe now. Subscribing helps others find our channel so we can help them too. Now, Rick now writes in with a challenge. Oh, we like a challenge, don't we, dude?
We do.
Hi, all, great show. I always make sure I watch it every week. I have a challenge if you wish to accept. Hopefully the teleprompter doesn't blow up. And you are only allowed to pick one of the big 4 banks. So which bank would you buy now with a short to medium term time frame? Would you change your decision with a longer term time frame approach? I'm going to go to you, Phil, on this one.
Well, I get the chance to redeem myself, and it was financial hardship loans that was the ASIC was looking at with ANZ and Westpac, I believe, if my memory serves me correct. So right now, with an overhanging investigation, I wouldn't be looking at any of the banks, but to play the game, because we're playing the game, I've got a
challenge, not a game.
A challenge, yeah. I've got to choose one. Look, months ago I said CBA, right? We were sitting on this desk, and I remember we had a challenge back then, and it was which stock would be the performer, and CBA was the name that I chose, and it's winning right now. So.
But would you buy it now?
Today, no, I wouldn't.
Would you buy any of the banks right now?
I've got to choose one, right? Let's
go.
You don't. I don't? No, well, I wouldn't, no.
Well, he's saying you have to choose one.
Yeah.
So that's the choice. And I mean, you know, I would say I don't want to buy a bank right now.
Yeah.
But if I had to
But is he
absolutely
saying that
choose one,
because
I'd
he's
choose
got money
CBA.
sitting there and he wants to know which one we would choose so that he would invest
But
in
that's
that?
not how you trade.
No.
It's not even close to how you trade.
I'll say Macquarie.
You're going to say Macquarie.
And what was interesting about his question?
Well, it's irrelevant. The answer is completely irrelevant because none of them are giving us a buy signal today.
Because at the end of the day, you want to buy things that are looking good for one, getting in at the best price, because that's what we do as technicians. We find that opportune buying moment to get in at that best price to give you the best risk reward. So
that's the other thing, because like when investors have a bit of money on the side, it's burning a hole in their pocket. They think they've got to invest it, don't they?
But sometimes you get somebody, they email in or ring in and they go, oh, my financial advisor says I need a bank stock, or my accountant says I need a bank stock in my portfolio, so which should I buy? And I go, well, why do you need to talk to your financial planner? It's just about buying stocks that go up and what's giving you the buy signal today.
We've said we're comfortable, even on the show before, to hold 5 or 6 stocks in the same sector if they are looking good and performing.
He said short to medium term. What if he had said medium to long term? Would you then
Well, that's what he's saying. Would that change it?
Yeah, so short to medium term, I'd say, look, you can trade any of the big 4 banks right now and get a short to medium term trade, a short-term trade out of it.
Bank though.
Yeah.
Medium term plus.
Yeah.
When you say short, you mean really short?
I mean really short. Any of them really short to answer your question, but medium to long term,
I'd go Westpac. Medium to longer term.
Yeah,
or Macquarie.
I'd go ANZ, Westpac, medium to long term. NAB hasn't even gone through where I was expecting it to go yet.
That's the challenge.
We've ruined the game.
Okay, this tape's going to explode in 3 seconds. All right, now before we let you go, what was your favourite part of the show? Was it our hot stock tip, our topic for the night, or was it a viewer question? Let us know by commenting below. Now, thanks to all of those who are watching on YouTube and Facebook. If you're watching on talkingwealth.com, stay tuned for more exciting stock picks, insights and strategies. We'll be right back with all of that and more. Next week in our main topic, we get into oversold stocks to buy now. Best ASX multi-baggers to make 100%. Make sure you join us next Tuesday night at 7 p.m. Australian Eastern Time. Now, if you love our show, remember to hit that like button now and subscribe to our channel, as this shows the support for the team that puts in the effort each week into bringing it to you. If you are subscribed, then you'll always know when we go live and put up new content. As always, thank you for joining us for now. Goodbye, good luck and good trading.